A fall of over 50% in the price of Brent crude from the beginning of the financial year has not only dented the prospects of profitability at Cairn India, but has had a much bigger impact on the balance sheet of its parent company Vedanta Resources Limited, a London Stock Exchange listed mining conglomerate. So much so that the Anil Agarwal controlled conglomerate is teetering on the edge of a possible breach of its covenants on its financial ratios, inability to refinance its debts, and rising cost of borrowings. And unfortunately, the worst is not over yet. Analysts tell us that there is a possibility that Cairn India will have to relook and review its capital expenditure program in the light of falling crude prices. Cairn India, which so far in fiscal 2014 had contributed around 52% to the total operating profit of the parent company Vedanta Resources, the operating profit now is expected to come down to 40% at a crude price of around $70 per barrel. Going forward, it might even come down to 40%, 30% and even further, as the outlook for the crude prices is not really good. Also, the PAT of Cairn India is also expected to come down by around 25 to 35% in this third quarter and might be even lower next quarter as the crude is subsequently falling. At current crude prices, Cairn India's cash flows have also turned negative. Therefore, all these rating agencies like Moody's and S&P have ensured that there is a watch on the company's profile further, especially on Vedanta Group's. S&P, which has kept the ratings of Vedanta Group at a negative watch while looking at the company for the next 3 years, and there's a possible downgrade. Moody's, which is one of the world's biggest rating agencies, has already downgraded the company to negative from stable.